Yesterday, the Fed chief's speech supported the US dollar. The US central bank is continuing to battle against high inflation, meaning flat the regulator is likely to raise interest rates again, pushing US Treasury bond yields higher and spurring the demand for the US currency. In our review, we will focus on other events that may impact investor sentiment in the market. You are watching Traders Calendar on the InstaForex TV channel. The most important macroeconomic data will be released only on Tuesday. Investors will assess the state of the US labor market. Notably, we were waiting for the same data last Tuesday, but for some unknown reason, the Office for National Statistics postponed this publication for a week. Meanwhile, analysts began to speculate about what the experts were trying to omit. Last week, we expected an increase of 22,000 unemployed. Now the report is predicted to post a 2,300 increase. The British pound may face a sell-off if the actual data is far from meeting the expectations. On Tuesday, investors will digest a rather large batch of data on the prospects of the developed economies. Market Economics will release the preliminary Purchasing Managers' Index for the industrial and services sectors. As a rule, news from Germany, the driver of the European economy, receives special attention. The fresh data will likely show the 16th month of a recession against the background of a sluggish demand both in domestic and foreign markets. Notably, if the index stands below 50, it indicates sectoral contraction. Due to the high central bank rate, consumption and business activity in Germany are struggling. In addition, the escalated geopolitical situation is dampening the economic recovery. However, the expected increase to 40 may help the euro to strengthen slightly against the US dollar. On Wednesday, investors are expected to focus on news about interest rates. At the very beginning of the trading day, markets will assess Australia's Consumer Price Index. According to analysts, inflation will slow down to 5.3% in the third quarter of this year. If so, the central bank will see no need to change the monetary policy. The Australian currency may see another sell-off after another pause in rate hikes. The IFO Business Climate Report will also add to the outlook for the German economy. The business climate has been at a low level for the fifth month in a row. In a highly uncertain geopolitical, inflationary and interest rate environment, this is a reasonable state of affairs, which in turn harms the investment attractiveness of the European currency. In the middle of the trading week, the Bank of Canada is expected to leave its monetary policy unchanged. The interest rate will likely be capped at 5% as a result of the slowdown in inflation in September. However, many investors still expect the central bank to raise interest rates before the year end. However, it's difficult to say how this may affect the Canadian dollar. At the moment, the Canadian dollar as a commodity currency is beyond by elevated oil prices. The crude is getting more expensive against the ongoing conflict in the Middle East and growing concerns about a possible disruption of supplies from the oil-producing region. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.